grind is back, the grind, the grind. Hey man, it's been a minute, bro. It's your boy, Duckle Un. Nah, I'm joking. But yeah, that's my YouTube channel, man. Bro, it's almost been 2 months since I've uploaded the last vid, and the title of that last vid was like, yeah, the title of the last vid was like, I'm quitting Forex, bro. And I don't know what I said in the video because I watched it back, and bro, the fucking audio is just muffled, like that type of shit. And I'm like, alright, but I'm just like fucking trading and still shit. Um, 2 months has passed. It's, I'm still in episode 7 in the ICT 2022 mentorship. But it's it's good, bro. It's still progress, right? Probably I'm in 6 months in learning ICT and I'm still at episode 7, which is kind of disappointing. But progress is progress. So we're still happy about it. But it's still not enough, right? Still not fucking profitable. Still not taking trades. Still not ready overall. So I just got back from a long break, you know, and I'm just going to review shit. And I think it would be a good idea for you guys to see reviews. So this is like 5 episodes. One, two, three, four. Yeah, episodes of the ICT 2022 mentorship, which I took notes and summarized and took this uh, important notes and gems and stuff. Yeah, so this is the episode 2 to episode 6, which is 5 episodes of the ICT 2022 mentorship notes. And yeah, I don't know if I can. Yeah, so this I have two screens now. This screen and this screen, right? This is a vertical screen and this is a horizontal screen. So which is pretty handy, I guess. Without further ado, I'm just going to summarize all of like shit that I fucking learned or taken notes from. So yeah, all right. So first, a video where ICT actually teaches stuff because in the 2022 ICT mentorship episode 1, he just talks about it's it's literally just an introduction of um what are the expectation of this fucking mentorship are. Yeah, basically an introduction. So episode 2 is where he actually started teaching stuff. So he teached in episode 2 um basically the fucking setup, right? So I put here. So first you get the daily or weekly bias, right? Will the weekly candle go higher or lower? You're looking for a likely movement higher or lower based on a weekly candle, right? So you're looking for a likely movement higher or lower based on the weekly candle. You're not trying to predict. You are looking for a likely movement in the weekly or daily candle, right? The market, what you like, what how do I know? How do I think of what is going more likely going to go up or down? Well, the market. This is a key important shit, bro. The market is going to draw to stops, which is liquidity, buy side and sell side, and it's going to run an imbalance. An imbalance is like the fucking gap between three candles. An imbalance is it forms with three candles. First candle, the second candle, which is the displacement, and the second candle. Make sure the first and the third candle, their wicks does not over like gap each other. Imbalance, which is a fair value gap, coming from the word gap, it has to have a gap, right? So that's basically an imbalance. It always draws to that because there's this fucking. He said like an analogy where like you put this paint, right? Like a paint roller. Like you do this to a wall, and as you paint to the damp to I'm bad at explaining, bro. Bear with me. As it goes down, what happens to the paint? The paint slowly loses paint to put in a wall, right? And what do you do to fucking cover it up? You go right back up to cover the paint that didn't paint as much, right? That's basically what it is. You get the idea, right? So yeah, that's basically it. So first you get the daily, weekly bias. You're not trying to predict. You're trying to know. No, you're trying to look for likely movements higher, lower. And how do you do that? By this single information that the market draws to liquidity and imbalances or fair value gaps. Then secondly, you identify buy side and sell side liquidity in the 1 hour time frame. Right? Above old highs, buy stops. Above old lows are sell stops. Anytime a significant price move lower is expected, always anticipate a measure of stop hunt, right? Or on a buy stop or short term high being taken out. I'm talking about you having a bias going up here, right? Anytime a significant price move lower is expected, always anticipates a measure of a stop hunt, right? If shit breaks, right, and then market structure shift or a break of structure, always expect a stop hunt. Always expect that shit, the fucking market will go to liquidity, and then that is where smart money takes the trade. Takes the trade. I'm sorry, that's on. Yeah, taking out. So wait for the market to go to the liquidity pool because in the ICT 2022 mentorship, I think he focuses on fair value gaps and liquidity. Right. This is a fucking going around fair value gap and liquidity. It's just it, bro. And I think it's very simple. It's very intact, but it's very hard as well. No, it's not easy, but it is very simple. It is the difference, I think. But yeah, so you wait for the market to go to the liquidity pool. You don't do shit until you see market going to liquidity, right? So yeah, that's the second step. You identify the buy side and sell side liquidity in a 1 hour time frame. So above old highs are buy stops, above old lows is sell stops. So the third thing you can do is the actual fucking trade, right? So you got the your buy side, sell side liquidity in 1 hour time frame, and then you wait for the market to go to the liquidity pool. Once it goes uh, and take the liquidity buy side or sell stop, you first wait for a market structure shift and then a fair value gap in the 1 to 3 minute time frame, right? So like 1 minute, 2 minute, 3 minute chart trend tends to be the best for finding the imbalances. 1 to 3 minute time frame, right? So imbalances, fair value gap. So once market goes to liquidity and it has a market structure shift, right? You wait for an imbalance or a fair value gap, and wait after market went to liquidity, wait for a misses to form. You wait for market structure to form. If that market structure creates a fair value gap, that is where you take the trade. That fucking fair value gap. Once it enters there, you sell or buy. That's basically it. Oh yeah, I forgot the 50 level, right? You put the put 50 level. So premium discount. If it's in premium, it's most likely going to the discount. If it's discount, it's most likely to go to a premium. Where do you put this 50 level? The high and the low of the area you're looking at. I don't know. But yeah, that's basically it. So you put TP below the 50 level, which is a discount if you're selling, and you put the TP on the premium if you are buying, right? So always go for a low hanging fruit, right? Don't go to like this high. I mean, it's just not it, bro. I mean, it could be it sometime, but most likely you are going to be profitable if you are going for the low hanging fruit. What is the low hanging fruit? Is like the most likely the market will go, right? Like you're very 100% sure if this fucking model has checked all the lists, right? Liquidity, market structure shift, fair value gap. It goes to the fair value gap. You put your TP in a low hanging fruit where you're sure that it will hit. So that's basically it. Um, Low hanging fruit. So what you're looking for is a run on liquidity, buy stop or sell stop, then a break in market structure or a market structure shift. If you have that and happens to create a gap, which is a fair value gap, that's what you're looking for. And when it trades into that, you can go take short or long, right? And I have this quote: "You're never going to be right about everything. You're going to get into it early. You're going to hold too long. You're not going to buy enough. You're not going to sell enough. There's always going to be some reason why you didn't do something right, and that's okay, you know." And I got this visual summary right over here. I don't know if I still have it. I want to show this to you guys. Hold on. Wait. Pics. Oh, there it is. How can I add this? Oh yeah, wait. Image. There it is. Right over here. Browse. Desktop. Trading notes. Pics. Mentorship. All right, this is it. Right. So this is what I made a visual summary of the ICT 2020 mentorship. Right. So basically, right, run above old high or old low, right, which is you taking liquidity. I'm just going to go with this higher. So run above old high, right? Then we look for old high, which is liquidity again. Then we look for a break of structure or market structure shift right over here. And then if it creates an imbalance or fair value gap, that is your trigger. That is where you sell or buy, right? And then you find out where the 50 is, and you want to find something like an old low or old high or an imbalance to aim for as your target, and you want to get the closest target, which is the low hanging fruit. All right. So that's basically it for episode two of the ICT mentorship. Episode two ICT mentorship. That is the basic summary in 13 minutes, bro. Hold on. How many minutes? Ain't no way, bro. If you watch my vid and actually listen shit, I mean I think it's more you more are more likely to learn in ICT mentorship, but I basically summarized the whole shit for you guys. It took me fucking 2 days to learn this shit, to fucking squeeze it, compress it, right? I mean, maybe there's some still gems that I missed, but I'm just going to find that out once I rewatch shit where I actually fucking watch the whole mentorship and actually learn from it. So yeah, so I'm planning. I'm not going to go through all of this. So this is episode two, right? And I'm going to continue. I'm going to make this a series. So that was episode two, and on to episode three, right? Because it's 40 minutes, and I think it won't upload shit if I go past 30 minutes. I don't know why. I'm just afraid I'll be talking shit, a lot of shit here, and I'm not going to make it away. So episode two, that was it. Episode three, here we come.